Now, Leslie McCormick of the Farwell Group, author of Bank on Yourself, Why Every Woman Should Plan to Be Financially Single Even If She's Not, joins us this morning. Good morning, Leslie.
Good morning, Marilyn.
So what do you have for us today?
This week, I'm going to continue the discussion about the markets and economy that Darren started last week. If you've been listening to the news or looking at your statements, you know that year-to-date has not been an enjoyable one for investors. Relatively speaking, the Canadian market has held decently well, but it's still been down over 10% year-to-date. The S&P 500 in the U.S. has been down over 20%, and the NASDAQ, the tech-weighted index, has been down over 30%. And even those less risky investments called bonds, they've been down over 13% as measured by the Canadian Core Bond Universe. So what's going on? Why is the market doing what it's doing? We have this push and pull going on, like a battle between good and evil. Corporate balance sheets and on the whole corporate earnings are some of the good things. But there are things like inflation and supply chain issues that we're contending with on the bad side. And this battle between good and evil makes for volatile investing. What the market is debating, particularly in the U.S., is this a recession now, soon, later, or maybe still a long way off? So what is a recession? Technically, it's defined as 2 consecutive quarters of negative GDP growth. Q1 in the U.S. was a negative surprise. Will Q2 also be negative? It's possible, only time will tell. And that's the point I want to make about recessions. They are only determined in hindsight. It's only when we look back, and sometimes with a significant lag, that we can say, yes, that was a recession. And what I want investors to keep in mind is that markets look forward. It is entirely possible that when we look back with hindsight, we say that the market year to date has been telling us that the U.S. went into a recession this year. But remember, markets look forward. They will start to look forward to recovery. So if fear of recession is what's driving the equity markets this year, what lessons can we learn from past recessionary markets? Markets typically decline going into the recession, but bottom months before the recession ends. They then look forward to the economy eventually recovering, and the markets turn higher in anticipation. On average, markets decline 29%. The mean is a decline of 24% in a recession. Interesting, the S&P 500 at one point in June was down about 24.5%. 1 year later, after the bottom, on average, the S&P 500 is up 40%, effectively recovering all of its losses. 2 years later, on average, the S&P 500 is higher by 54% from the bottom. And so my encouragement today is that we've been here before and we've recovered. Not only that, but time and time again throughout history, the market has not just recovered, but continued to make new highs. What's important is that for those who are retired or nearing retirement, that your portfolio is set up to weather these storms, that shorter-term noise doesn't derail your longer-term plans. By having a portfolio you're comfortable sticking with when times get tough, but that can also continue to provide a reliable income. During times of market decline, do you have a place that income can come from that isn't down nearly as much as the market? Or are your withdrawals simply adding to your declines, making it ever harder for your portfolio to recover? Times like this is where your investment and income strategy gets tested. It's time to ask, is yours passing the test?
I take a breath to take everything you've said in. But basically, if we're anxious, we need to talk to our advisor. And if anyone listening wants some advice about how to weather this storm, feel free to call Leslie McCormick, Darren Farwell, and the Farwell Group. The number, Leslie?
416-863-7501.
416-863-7501. The Farwell Group. Rather than wonder what's going to happen, ask your questions, get your answers, and weather the storm without biting your fingernails. Leslie, thank you for that information. It was very enlightening, and I look forward to speaking to you again soon.
Thank you, Marilyn.
Thank you, Leslie.